Come to your deductions chapter. Deductions chapter. In your deductions chapter, there is illustration number 21. Okay. This illustration number 21 is based on 10AA. Okay. See, Mr. Y furnishes you the following information for the year ended 31st March 2025. Total turnover is given of unit A, which is located in SEZ. This is the total turnover, 100 lakhs. Now profit of unit A is given. Are they telling you that this is export profit, domestic profit? No. So this is the total profit of unit A. Okay. Next one, out of the total turnover, how much is the export turnover? How much is the export turnover? It is given. Export turnover of unit A, and which is received in India in convertible foreign exchange on or before 30th September 2025. No problem. We just have to see that how much is the export profit. That's it. Okay, now how much is the export turnover? Now export turnover out of 100, 50 is export turnover. So can I say out of 30, 15 will be your export profit. Sir, how did you get it? Out of 100, half is export. So out of total profit, half will be export profit only, no? Common sense. But we'll apply a small formula so that they don't feel that we have not done anything. Okay, no? So we'll apply the formula also, don't worry. Total turnover of unit B, which is located in domestic tariff area. This is not his SEZ business. This is a business located in normal area, domestic area. Okay. The total profit of unit B is 20. Compute the deduction under section 10AA for the assessment year 25-26, assuming that Mr. Y commenced operations in SEZ and DTA in the year 1920. So both the businesses were started in which year? 1920. The operations of both the business started in 1920. So 1920 was the first year. 1920, 2021, 21-22, 22-23 and 23-24. 5 years have already gone. This 24-25 will be the 6th year for both these businesses. Yes or no? Now can I say, if I have to present the answer, I will be presenting it like this. What is the name of assessee? Mr. Y, no? Mr. Y is doing two businesses. One is unit A, that is in SEZ. Another one is unit B, that is in DTA, domestic tariff area. Unit A business, total turnover 100 lakhs. Total profit is equal to, total turnover is this, export turnover. Is equal to 50 lakhs and total profits is 30 lakhs right now. Now for unit B, I'll write the same thing. but there will not be any export profits. Total turnover, total profits. Total turnover was 200 lakhs and total profits were 20 lakhs. Okay. Now see, can I say that this entire total profit of unit B will be what? Taxable under the head PGBP, because nothing out of this will be exempt. No deduction, no exemption. Entire profits will be taxable. Now out of the profits of unit A, can I say the details are given for previous year 24-25. So this is 6th year operation. Sixth year of operations. Out of this 30 lakhs, how much will be export profits? That I have to first calculate. Then my DTA profits will be there. Sir, export profits will be 30 into 50 upon 100 is equal to 15 lakhs. Okay. And DTA profits will be balancing figure. Balancing figure 15 lakhs. Yes or no? Without any doubt, this 15 lakhs will be taxable under the head PGBP. There is no doubt about it. Yes or no, sir? Because that is DTA profits. Now let us talk about this export profit. Export profit is 15 lakhs. Don't you think that this 15 lakhs export profits are export profits for which year? 6th year, no? So for the 6th year, these are my export profits, 15 lakhs. So for 6th year, 50% of my export profits amounting to 7.5 lakhs will be allowed as a deduction under section 10AA. So the deduction will be this 50%. Done, sir? Now what about the balance 50% of export profits? So balance 50% of export profits, 7.5 lakhs, I cannot exempt them. Why, sir? Because only 50% is exempt, only 50% is allowed as a deduction. This will be taxable. Now, do you have the taxable amount? Do you have the taxable amount? This 15, this 20 and this 7.5. Color, pink color. So if they tell you in the same question, they tell you the total deduction under section 10AA. So your answer will be 7,50,000 and the taxable profits for this year will be 20 lakh plus 15 lakhs. It will be 35 lakhs. Okay. And then 7.5 lakhs will be 35 plus 7.5 will be 42.5 lakhs. Okay. So 42 lakh 50,000. Meaning that in this year, no, you have earned a total profit of 50 lakhs. 20 lakhs from your domestic business and 30 lakhs from SEZ business. Getting my point? So out of the 20 lakhs, nothing will be exempt, entire 20 lakh will be taxable. Out of the 30 lakh, entire 15 lakh of export profit will not be exempt. 50% of the export profit will be exempt. Only 7.5 lakhs. Okay. And the balance 50% of export profit and balance DTA profits of SEZ units will be taxable only. Done, sir? So from this question they can ask you these two things. You have to remember, You have to remember, they can ask you that what is the amount of deduction available, that also they can ask you, and what is the taxable profits, that also they can ask you. Okay. So will you be able to calculate like this? 2 marks MCQs, done. Or even if this question is asked for 4 marks, you are able to get the full 4 marks by doing just this thing only. Done, sir? Should we move on to the next question? Okay. So now we are solving question number 12, which is given in your computation of total income topic. Right now, test your knowledge. Question number 12. Mr. X, an individual, set up a unit in SEZ in the financial year 1920 for production of washing machines. Very good. So he started manufacturing business, manufacturing of washing machines from a unit in SEZ. The unit fulfills all the conditions of section 10AA. During the financial year 23-24, he has also set up a warehousing facility. During the year 23-24, he has set up a warehousing facility in the district of Tamil Nadu for storage of agricultural produce. Do you remember warehousing of agricultural produce is 35 AD, specified business. So this is his specified business. And unit in SEZ, this is his SEZ business. How many businesses he has? 2 businesses. One business in SEZ, another business in normal area, specified business. Okay. It fulfills all the conditions of section 35 AD. Capital expenditure in respect of the warehouse amounted to rupees 75 lakhs, including cost of land 10 lakh rupees. The warehouse became operational. Warehouse became operational with effect from 1st April 2024, meaning the operations of the specified business you have started in this year only. It was set up in the last year, but you started the operations from this year. So this is the first year of your warehousing business. Yes or no? And expenditure of 75 lakhs was capitalized in the books as on that date, meaning that 75 lakhs was a pre-commencement capital expenditure on your specified business, including 10 lakh rupees of cost of land. Okay, no? So any pre-commencement capital expenditure on your specified business is also allowed as a deduction in the year in which the business is commenced, provided it is capitalized in the books. So this is the first year, 24-25 is the first year. In this year, the pre-commencement capital expenditure will be allowed as a deduction in this year because it was capitalized in the books. But the entire capital expenditure cannot be claimed. Only 65 lakhs will be allowed because out of 75 lakh, 10 lakh was the cost of land. Okay, no, that cannot be claimed as a deduction under 3580. Now, relevant details for the financial year 24-25. Profit of unit located in SEZ, that is 40 lakhs. This is the total profits. Export turnover received in India in convertible foreign exchange, that is 80 lakhs. Domestic sales of the above unit is 20 lakhs. So can I say 100 lakhs is the total sale? On that 100 only 40 lakh is the profit. Okay. Now profit from operations of warehousing facility before considering deduction under section 35AD, that is 1 crore 5 lakhs. Now you are supposed to compute income tax including AMT. Forget about that AMT right now. Okay, right now forget about the AMT. Including AMT under section 115 JC, income tax liability of Mr. X for the assessment year 25-26, both as per section 115 BSE and as per regular provisions of the Income Tax Act. Advise Mr. X whether he should pay tax under the default tax regime or normal provisions of the Act. Now first you'll have to calculate the profits as per normal provisions. Calculate the tax on that. Then again you are supposed to calculate the profits as per 115 BSE. Calculate the tax on that. And then you will have to advise that what Mr. X should do. Okay, now what Mr. X should do. Now please pay attention. See, from this question only there is a concept which is coming out. The concept of alternate minimum tax. Okay. So till the time you don't know that concept, you will not be able to calculate the income under the normal provisions. You will be able to calculate income as per 115 BSE. There will be no problem. Why? Because when 115 BSE is applicable, AMT provisions do not apply. When 115 BSE gets applied, no, AMT is not applicable. But if you shift out of 115 BSE and you follow normal provisions, that time provisions of alternate minimum tax, AMT provisions, are also applicable. So in this question, what you are supposed to do, if you don't follow 115 BSE, then you will have to calculate regular total income and regular tax liability also, and along with that you will have to calculate adjusted total income and AMT liability also. Both are applied. But if you don't follow 115 BSE, only then you are supposed to do that. But when you follow 115 BSE, that time you are supposed to calculate your regular total income and regular tax, and this tax will be as per 115 BSE rates. Okay, and here whatever tax you are going to calculate will be as per, this will be as per normal rates. Okay, no, normal rates which we have. So now what is your alternate minimum tax? What alternate minimum tax provision has to say, that we have to learn. Then only we are able to calculate the first part. And then only we can give the advice that what is to be done, what is not to be done. Getting my point? So now, see, I will tell you about the AMT provisions. Okay, no, AMT provisions are from 115 JC to 115 JF. So the provisions of AMT are from 115 JC to 115 JF. These are the AMT provisions. Now there are different things that when the AMT will be applicable. If the AMT provisions are applicable, then who will be liable to pay AMT? AMT liability, when that liability will arise, what will be the rate, how adjusted total income will be calculated, what will be the rate of alternate minimum tax. Okay, no? Now everything we are going to discuss. What will be the AMT credit, how that AMT credit will be calculated. So first we'll learn this AMT provisions, then again we'll come back to this question. Everyone, sure? Now pay attention. See, There is one section 115 J double E, subsection 1 talks that any person but other than company. So for the companies, AMT provisions are not applicable. Why? Because for companies, MAT provisions are applicable. AMT not applicable, MAT applicable, MAT, minimum alternate tax. So if the company is already made liable to pay minimum alternate tax, hence the companies are not made liable to pay alternate minimum tax. Yes or no? This alternate minimum tax provisions are applicable to all the assessees, all the types of persons other than a company. So you are any person but other than a company. You can be an individual also, you can be HUF also, you can be AOP, BOI, firm, LLP, you can be any person. And such person has claimed deduction under section 80 IA to 80 RRB except ATP, or he has claimed deduction under section 10 AA, or he has claimed deduction under section 35 AD. If the assessee has claimed any of these deductions while computing total income. So if you are an assessee other than a company and during the previous year you are eligible to get any of these deductions, and while calculating your total income you have claimed any of these deductions, yes or no, then for you the AMT provisions will be applicable. Meaning 115 JEE subsection 1 talks about applicability of AMT provisions. Applicability of AMT provisions. Okay, now pay attention. Here they are saying that as per section 115 JEE subsection 2, AMT provisions shall not be applicable to an assessee who is individual, HUF, AOP and BOI, or AJP who has claimed the deductions under section 80 IA to 80 RRB except ATP, or 10 AA or 35 AD while computing total income. So if this is the assessee and he has claimed any of these deductions, but the total income does not exceed 20 lakhs. So there is a limit on total income is given. See, all the assessees are, are liable to calculate their, for all the assessees, the AMT provisions will apply. To individual HUF, AOP, BY and AJP also it will apply, provided they have to claim any of these deductions. Which deductions I said? 80 IA to RRB or 10 AA or 35 AD. So for them also the provisions will be applicable, but for the purpose of applicability their total income should be more than 20 lakhs. After claiming these deductions, if their total income is more than 20 lakhs, then only for these assessees the AMT provisions will be applicable. What if you are an individual HUF, AOP, BY, AJP? Okay, I am writing about these assessees. You are individual HUF, AOP and BY or AJP. These three deductions which are mentioned above, yes or no? These three deductions you have not claimed only. You have not claimed these three deductions only. Then whatever is your total income, any amount, AMT provisions will not be applicable for you because you have not claimed these three deductions only. Hello sir. In order to apply AMT provisions, it is necessary that any of these three deductions you have claimed while calculating your total income. Have you claimed any of these three deductions? No. Then whatever is your total income, whatever amount of your total income you are having, AMT provisions will not apply. But if while calculating your total income, you have claimed any of these three deductions and your total income does not exceed 20 lakhs, still the AMT provisions will not be applicable, even if you have claimed any of these three deductions. Getting my point? But if you have claimed any of these three deductions and even after claiming these three deductions, your total income is more than 20 lakhs, that means you are not a small assessee, you are a big assessee. Such a heavy deductions you are claiming, and even after claiming such heavy deductions, your total income is huge, more than 20 lakhs. So for you, AMT provisions will be applicable. So for individuals HUF, AOP, BY and AJP, the applicability of AMT provisions will happen only in this case. Getting my point? But for any other person, not being a company definitely we have to exclude. Now which persons will be covered? Tell me. Local authorities, firms, LLPs, they will be covered here, no? If they have not claimed any of these three deductions, whatever may be the amount of their total income, AMT provisions are not applicable for them. Why not applicable? Because they have not claimed any of these three deductions while calculating their total income. But while calculating their total income, if they have claimed any of these three deductions, then friends, any amount of total income is there, whether the total income is less than equal to 20 lakhs, 20 lakhs, more than 20 lakhs, in all the cases the AMT provisions will apply. So for them, for these type of persons, applicability of AMT provision will happen only in this case. Yes or no? So did you know that when the provisions will apply? Now what these provisions are telling you? Now after looking at 115 JEE1 and JEE2, we came to know that AMT provisions are getting applicable. Are you covered by AMT provisions? Yes. Now what is happening, that when you calculate your regular total income and on that you are calculating your regular tax by applying normal rates. Okay, no? Because see, 115 BSE rates if you are applying, meaning you are covered by 115 BSE, yes or no? You are not shifting out. You are covered in default tax regime. Then definitely AMT provisions are not applicable only for you. Under 115 BSE, calculate simply your total income and simply calculate your tax liability as per 115 BSE. That's it. No need to calculate alternate minimum tax, because alternate minimum tax provisions are not applicable if you follow 115 BSE. Yes, sir? But if you don't follow 115 BSE, will you calculate your regular total income? Yes. While calculating your regular total income, you would have taken any of these three deductions? Yes. And after claiming these deductions, whatever may be your total income, AMT provisions will be applicable. But if you are individual HUF, AOP, BOI and AJP, after claiming these deductions, your total income should be more than 20 lakhs. Total income more than 20 lakhs. And on that, whatever tax you are calculating as per normal, by applying the normal tax rates, if the tax calculated by you is less than 18.5% of adjusted total income, this is known as alternate minimum tax. This is known as alternate minimum tax. What is the rate of alternate minimum tax? 18.5%. That rate you are supposed to apply on adjusted total income. By applying this 18.5% on adjusted total income, whatever amount you are getting, that amount is your alternate minimum tax. Now, if your alternate minimum tax is less than the regular tax which is calculated, in that scenario, if this condition is fulfilled, okay, no? This condition is fulfilled, then section 115 JD subsection 1 says that adjusted total income shall be deemed to be the total income for the assessee. Now your total income which you have calculated, no, regular total income, that will be ignored. Now this adjusted total income will be deemed to be your total income, and alternate minimum tax shall be deemed to be the income tax payable, income tax liability. So now your income tax liability, which was regular tax, even that will be ignored. Your regular total income will be ignored. Your regular tax which you have calculated will be ignored. Adjusted total income will be deemed to be your total income, and the AMT which you have calculated, that AMT which you have calculated will be paid by you as your income tax liability. This is 115 JD subsection 1, which talks about obligation or liability to pay alternate minimum tax. If this condition is fulfilled, pay this amount as your income tax. If this condition is not fulfilled, calculate your regular total income, calculate the regular tax, pay that regular tax. Meaning that if the regular tax was higher than alternate minimum tax, we will take the regular tax only. But if the regular tax is coming less, then we are going to collect how much income tax from you? Income tax equal to the amount of alternate minimum tax. This much minimum tax we want from you. We cannot accept a tax amount lower than this from you. Because we have to run the country, boss. To run the country, people like you, just imagine, you would be claiming the deduction under 35AD, huge deduction. You would be claiming 10 AA deduction. You would be claiming 80 IA to 80 RRB. See, from 80 IA to 80 RRB, whatever deductions are there, no, those deductions are not there in your CA intermediate syllabus. Those you are going to study in final. But out of these deductions, 3 deductions you have already done. 80 JJAA you have done, 80 QQB you have done, and 80 RRB you have done. So still 80 IA to 80 RRB, 3 deductions you have claimed. But they are not talking about only these 3 deductions. 80 IA to 80 RRB, any deduction. Now these deductions are profit based, income based deductions. If you earn certain type of incomes, certain type of profits, these deductions are allowed. Doing specified businesses, from those businesses certain profits are earned. 100% of those profits for some years are allowed as a deduction. Every year earn these type of profits and every year take the deduction of these type of profits. Yes or no? Every year earn this type of income and take the deduction of these type of incomes. So what they are trying to do, that they are trying to give you benefit. Okay, but after taking such huge benefits, no, your total income remaining will be very less, because these deductions are not small deductions. These are big deductions. Amount allowed as per these sections is higher, huge. And just imagine, if you are claiming such huge deductions, no matter whatever amount of profit remaining in your hands, you are not going to pay tax on the entire profits. You are going to pay tax at a very lower profit. Just imagine, no, in this question which we solved, how much profit you earned? You earned 50 lakhs. See, 30 lakhs from your this business, SEZ business, you are earning 30 lakhs. And here you are earning 20 lakhs. But on how much profit you are paying tax? Are you going to pay tax on the entire profits? No, you are going to pay tax only on 42.5 lakhs. 7,50,000 still earned by you as a profit will be there in your hands. But are you paying tax on your entire profits? No, you are going to pay tax only out of 50 lakhs, only on 42.5 lakhs you are paying tax. Just imagine, this was the 6th year. For example, if it was your first year, second year, 5th year, then the entire export profits 30 lakhs, 15 lakhs. Out of 30, 15 lakhs, entire export profits would have been exempted, would have been allowed as a deduction. And only the DTA profits of 15 lakhs and that 20, only 35 lakhs would have been taxed in your hands. Earning 50 lakh profits but paying tax only on 35 lakhs. So this is the magic of these sections. You are earning huge profits, but out of those entire profits, you are paying very less tax on very less profits. And as a result of that, a person who is earning huge profits is not paying tax on the entire profits. Majority of the profits are allowed as a deduction, and only a small portion of profits is remaining in your hands for the purpose of taxability. See, actually, you are not having this much amount in your hands. You are having more amount in your hands. But you are paying tax on a very less amount because these deductions were available. So government is saying that, okay, you are taking these deductions. As a result of these deductions, we are only allowing you these deductions. As a result of these deductions, your profits are coming drastically down. Your total income will come drastically down. So therefore, the profits which you are going to calculate will be very less. As a result of that, your regular total income will come very less. And on that, whatever tax you are going to calculate will be very less amount of tax. Now, from a person like you, who is having huge profits, if you are taking this much tax only, the normal people of India are cursing the government that you are, rich friendly government. You are giving them more benefits. You are extracting taxes from us, but not extracting taxes from the people who are earning more. They are becoming rich day by day. Getting my point? So please, no, please. See, if you are having this much regular total income and this much regular tax, if this tax is lower than this amount, no, we will not accept this tax, no. At least pay this much amount of tax to the government. At least pay this much. Now see, government has a different intention. Okay, government is saying, whatever the government is saying, that is correct. If you are paying tax, peanuts as a tax, very less amount as a tax, then how the government is going to run the country? Because the majority of the profit are earned by people like you only. Majority of the incomes in India are earned by you people only. And you all will not pay the income tax. Then how do we run the country? We cannot ask for taxes from middle class, lower middle class and poor people. No. They don't have this much income which you all have. Still, whatever we can extract from them, we are extracting. But you should also be responsible to pay a minimum amount of tax, no? We have to run the country. And we have to show ourselves good in the eyes of other public also, general public also. That see, we are not rich friendly government. So the government, whatever the government is doing is correct only. But see, you will tell the government that government, why do we pay you extra tax? The deductions, we never came to ask for the deductions. Your law only made the provisions. You only made the provisions in the law. And as per the law, if we are getting the deduction and our total income is coming less, and as a result of that our tax is coming less, so we should be paying this much tax only, no? If you want to extract a minimum amount from us, then stop giving these deductions. Why are you giving all these deductions? At the very first, instance, you should not give these kind of deductions only. Then you are fooling us. At one hand, you are telling that, okay, take this deduction, take this deduction, take this deduction, you will get benefit. And now that we have taken the benefits, you were knowing, no, that after taking this much huge benefit, our profits will be less, our total income will be less. This was known to you from the very beginning only. Then why are you again putting us in a trouble to pay this much amount of minimum tax? This is something bad which you are doing with us. And even these people are correct. They are logical. So the government is saying, see, don't worry. This tax which you are supposed to pay now is already paid in the alternate minimum tax. If we are going to take a minimum amount of tax, say for example, this tax was 100 and if this is 250. So we are not telling you to pay 100, we are telling you to pay 250. Meaning that 100 is already paid. And 150 rupees extra which you will pay in the form of alternate minimum tax, no, that we are going to give you as a credit, AMT credit, which will be carried forward for 15 years. In the next 15 years, whenever you are liable to pay the regular tax liability, no, what did I say? Whenever you are liable to pay regular tax liability, from that regular tax liability, take the credit of this AMT. That time, regular tax liability you reduce by the amount of this AMT, because this much amount of extra tax you have already paid right now. Okay. So this much tax we are not going to collect in the form of regular tax. Getting my point, everyone? Hello? So the government is making sure that at least this much amount is received by these people. From these people. Okay, no? So 115JD subsection 1 says that when there is a liability, see, once the AMT provisions are applicable, okay, you have to first check the applicability. Once the AMT provisions are made applicable, then you are now liable to pay AMT. And AMT will be how much? 18.5% of your adjusted total income. If that AMT amount is more than the tax which you have calculated on a regular basis. Yes or no? So your total income will be ignored, your regular tax will be ignored, adjusted total income will become your total income, and the AMT which you have calculated will become your income tax liability that you are going to pay. Okay, but now to calculate this 18.5%, this AMT amount, this 18.5% you have to apply on adjusted total income. What is the meaning of adjusted total income? See, The total income which you have calculated, no? Regular turnover, no, it is regular total income. Total income. Okay, regular total income. So the regular total income which you have calculated, this you have calculated by taking those deductions. What if we were not allowing you those deductions? Then this amount would have been higher. So after taking 10 AA, you have calculated total income. After claiming 35 AD, you have calculated your total income. After claiming 80 IA to 80 RRB, you have claimed this calculated this total income. Do one thing, those deductions which you have claimed now to calculate this total income, add all the three deductions. But wait, 35 AD, the deduction was available for capital expenditure incurred on asset. So any asset acquired for specified business, the entire cost of that asset was allowed under section 35 AD. So if we are telling you to add that 35 AD deduction, meaning that we are not allowing that cost. Okay, no. For example, we are not allowing that cost under section 35 AD. So we are telling you to add back that cost. The deduction which you have claimed under section 35 AD, add back that deduction 35 AD. Meaning the cost is not allowed. But definitely, if the cost is not allowed, that out of that cost, some amount would have been allowed in this year in the form of depreciation, no? Reduce that depreciation amount. Depreciation on the amount of capital expenditure which was allowed under section 35 AD, which you are now adding back. Getting my point? So do one thing. Take your total income. So the total income which you have calculated on a regular basis. Hello? Take your total income. Now this total income will be after claiming all those deductions. Yes or no? In this add the deduction which you have claimed under section 80 IA to 80 RRB except ATP, then 10 AA and then 35 AD. But remember, reduce the depreciation on actual cost which was allowed under section 35 AD. On this amount only calculate the depreciation. Yes or no? The amount which you are adding back, on that amount calculate depreciation for this year and claim that depreciation. Now the total income which you have calculated, these three deductions which you had claimed, you are adding back, and the depreciation on the 35 AD component. You do add or less. Have you adjusted your total income? This is nothing but the adjustment happening in your total income. So after doing these adjustments, whatever amount will be there, that will be your adjusted total income. This you have to calculate. This is given under section 115 JD subsection 2. Subsection 2 says that how to calculate your adjusted total income. Okay, sir. Now 18.5% you are supposed to apply on this amount. That rate of AMT 18.5% you are supposed to apply on this amount. And how this amount will be calculated? It is given in 115 JD subsection 2. That if you become liable to pay, when are you becoming liable? Liability you will be able to calculate only if you are able to calculate 115 JD2, meaning adjusted total income. So calculate adjusted total income, apply 18.5%, you will get AMT. That AMT amount is higher than the amount of regular tax. Then ignore regular tax, ignore the regular total income, adjusted total income will be deemed to be your total income, and the AMT will be your income tax liability. That's it. Sure, sir? Now pay attention. Pay attention. A report from a chartered accountant must be prepared stating all the calculations, certifying all the calculations which you have made, the total income calculated by you, the deductions claimed by you under 10AA, 35AD, yes or no? So your CA will make a report. If 115JD, meaning that 115JD to 115JF, the AMT provisions are made applicable to you and you are liable to pay what? AMT, no? So now your CA will issue a report. In that report, all the reporting related to alternate minimum tax will be done. That what was your total income, which was calculated regular basis, what was the tax liability calculated, how much deduction under 10AA was claimed, how much deduction under 35AD was claimed, what should be the amount of depreciation on that 35AD amount, okay, no? Then how much deduction you would have claimed under section 80IA to RRB except ATP. Now after claiming all these, the total income was this much, you are showing that your adjusted total income is this much. Is this adjusted total income getting tallied with the adjusted total income which should be calculated based on this report, yes or no? If there is some discrepancy, everything will be given in that report. So you must be getting a report made from the chartered accountant in prescribed format, and the report from CA is must, that is written in 115JD subsection 3. Okay, now do you know assessee is doing a business in IFSC. IFSC, you have heard, International Financial Services Center. I had talked about this when I taught you the tax rates on capital gain. International Financial Services Center. Do you remember this? So if you are having a business in International Financial Services Center, so for these assessees, AMT provisions applicable or not applicable? AMT provisions for these assessees also applicable, but the AMT rate, which is 18.5% for everyone, which is 18.5% for all assessees, will not be applicable for these assessees. The AMT rate for them will be only 9%. So this is given under section 115JD subsection 4. So 115JD subsection 4 says that AMT rate will be only 9% for those assessees who are doing their business in IFSC. For them also the AMT provisions are applicable. For all the assessees, the AMT provisions are applicable. So for you also the AMT provisions are applicable, even if you are doing your business in International Financial Services Center, Gift City, near Gandhinagar, I told you. Okay, no? But the rate applicable for you, unlike others, it will not be 18.5%. It will be only 9%. For you, only 9. You calculate your adjusted total income. On that, you don't apply 18.5%. You apply only 9%. 9% of adjusted total income will be your AMT. If that is higher than your regular tax, ignore the regular tax, pay this AMT. Got it, sir? JD1, when is the obligation? JD2, how to calculate the adjusted total income? JD3, report of a chartered accountant in prescribed format is required. Okay, and then JD4, the rate of AMT will be only 9% in case of assessees doing business in IFSC. Okay, and JEE, applicability and non-applicability, JEE1, JEE2. Okay, now pay attention. I have written JD everywhere. See, it is my mistake. I have written JD everywhere. This is not JD, this is JC. Everyone it is JC. This is my mistake. I have written JD everywhere. It is JC, JC, JC. 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 So when AMT provisions applicable, JEE 1 and 2. When the AMT is supposed to be paid, when the liability of AMT will arise, when you are obligated to pay AMT JC1, adjusted total income JC2, and then report from a chartered accountant JC3, and 9% rate for IFSC units JC4. It is C, it is not D. It was my mistake to write JD. Okay, it is JC. JC is correct. Now pay attention. Now what will happen now? See, in previous year 24-25, this is my previous year. Okay, now in this year, my regular tax which I calculated, no, regular tax for this year was 10 lakh rupees. So I calculated my total income regular way by taking all these deductions and all, and my regular tax came to 10 lakh rupees. In this year, I calculated my adjusted total income also, and on that I applied 18.5%. So my AMT liability, alternate minimum tax, which I was supposed to pay for this year, was 13 lakh rupees. Example, example. It can be any amount. Now the regular tax is 10 lakh for this year, and the AMT for this year is 13 lakhs. Tell me, am I liable to pay AMT in this year? The answer is yes, I am liable to pay AMT because my AMT is higher than the regular tax. See, AMT is higher, no? So in this year I am supposed to pay what? Alternate minimum tax. So what will be my final tax which I am going to pay? 13 lakhs. How much tax I was supposed to pay? 10. Did I pay that 10? Yes. But on top of that, over and above 10, I paid extra 3 lakhs. So those extra 3 lakhs which I paid, the difference between these two taxes is my AMT credit. How much is the AMT credit? 3 lakh rupees. Now for previous year 24-25, AMT credit is 3 lakhs. Now this will be carried forward for how many years? Next 15 years. In the next 15 years, whenever I am liable to pay regular tax, that time from that regular tax liability, I will be able to claim the credit of this 3 lakhs. To the extent of this 3 lakhs, I will not pay regular tax. From my regular tax, I will reduce this 3 lakh later on. Sir, in the next year, for example, in the year 25-26, my regular tax was 12 lakhs. And in this year, my AMT liability came to 12,90,000. Possible, not possible? Possible. Let's not take 12,90,000, let's take it 14,90,000. So now, will I pay AMT again in this year? Yes. Will I accumulate more credit this year? Yes. How much? 2,90,000. Now don't you think that this 3 lakh will be carried forward to this year first? So first of all, I will bring this 3 lakh in this year. Okay. Then this year I thought that I am liable to pay what? Regular tax. If I was liable to pay regular tax, then this 3 lakh would have been adjusted this year. But am I liable to pay regular tax? No. I am liable to pay AMT only this year. And this year also, extra tax I paid in the form of AMT amounting to rupees 2,90,000. So can I say for the previous year 25-26, this was my AMT credit. Now wait. This 2,90,000 will be carried forward for the next 15 years, and this 3 lakhs will be carried forward for next 14 years, because this 3 lakh is carried forward for the first year. This is the first year, but in the first year it cannot be set off. So now it will be carried forward for next 14 years. Getting my point, everyone? Hello, sir? So now pay attention. Now in the next year, can I say previous year 26, 27? In this year, I was liable to pay 15 lakh rupees of regular tax. And my AMT also 15 lakh 40. Tell me how much I will pay this year. I will have to pay this entire 15 lakh 40. Again the AMT is payable. Now can I say 3 lakh and 2 lakh 90? 3 lakh will be brought forward for the second year and 2 lakh 90 will be brought forward for the first year. Now 3 lakh will be carried forward for the next 13 years. And 2 lakh 90 will be carried forward for next 14 years. Okay, no? And do I have any credit for this year? Yes. This year also credit was 40,000. Are you all getting what is happening? Now in the next year, can I say previous year 27, 28? My regular tax was 20 lakh rupees. And I was liable to pay only 15 lakh 50,000. 15 lakh 60,000 as AMT. Now tell me, in this year 27, 28, now in this year will I pay AMT or I will pay regular tax? So this year I have to pay regular tax. Okay, no? Now don't you think 3 lakh will be carried forward in this year, 2 lakh will also be carried forward in this year, 40,000 will also be carried forward for this year. 3 lakh carried forward third time, 2 lakh 90 carried forward for second time, and 40,000 carried forward for first time. 40,000 next 14 years, 2 lakh 90 next 13 years, 3 lakh will be carried forward to next 12 years. Yes or no? Which will lapse first? Which is the oldest one? Color, yellow color. 3 lakh is the oldest one, no? Because this is already the third year in which it is carried forward. If I don't adjust it in this year, this will be carried forward for next 12 years only. So this is liable to lapse first as compared to 290 and 40. So it is always advisable to adjust the oldest AMT credit first. Yes or no? Just like the way in which we did for business losses. The oldest business losses first from the business income. Yes or no? So like that same way, the oldest AMT credit will set off first. So wait, please pay attention. Can I set off this 3 lakhs? Can I set off this 2 lakh 90 also? And can I set off this 40 also? Set off please. And now tell me how much remaining. $13,70,000. So 13,70,000 regular tax you pay for this year. But wait a second. If after adjusting the AMT credits, your regular tax becomes less than the AMT for this year, then that is not allowed. This year minimum tax we want 15,60,000. Either you pay your regular tax or you pay your AMT. See, if your regular tax was lower than 1560, we would have at least taken 15,60,000 from you, no? But we are not taking AMT 15,60,000. We are taking what? Regular tax, because it is more. And you had a credit also, credit of AMT, which you can adjust. Adjust, no, we are allowing. But don't adjust too much. Adjust only to the extent your regular tax becomes equal to your AMT. After adjusting this, if the regular tax is less, how can you how can you pay a tax lower than the AMT in this year? At least 15 lakh 60 must be paid in this year. Wait a second. So after adjusting this, the regular tax cannot come 13 lakh 70. Even after adjusting these, it should be 15 lakh 60 only. So can I say I will adjust this 3 lakh fully? Yes or no? So 3 lakhs gone. Out of 20, 3 lakh adjusted. How much more I have to adjust? How much more? Out of 20, I have adjusted 3 lakhs. So the liability becomes 17. I don't have to, bring it below 15 lakh 60. So 1 lakh 40 more I will adjust. So that my regular tax becomes 15 lakh 60. Yes or no? That 1 lakh 40 will be out of this 2 lakh 90. Now this 2 lakh 90 will become 1 lakh 50. And 1 lakh 40 I will adjust. So total 4 lakh 40 I can adjust. Total 4 lakh 40 I can adjust. Because can you see the difference between these two? That difference is 4 lakh 40. Now adjust your AMT credit only to the extent of 4 lakh 40. So that your regular tax does not become less than 15 lakh 60. Getting my point, sir? So can you adjust this 40,000? No. Can you adjust the 2 lakh 90 fully? No. Out of 290 you will have to adjust only 140, so that 150 will still remain out of that 290. Now in the next year, you were supposed to carry forward this 3 lakhs. But did you adjust this entire 3 lakhs? Yes. Don't carry forward because it is already adjusted. Now you were supposed to carry forward 290 also. Don't carry forward 290 because out of 290, 140 you have already adjusted last year. So how much remains? Only 150 will remain. That you carry forward. Yes or no? Out of this, only 150 will remain. And that 40,000 entirely will remain. Yes or no? So tell me, this 290, this 40,000, and out of this 290, how much remains? 150. I have done the same coloring so that you can identify. Okay. See, 3 lakh was my first year credit. Carried forward for third year. Third year, I am liable to pay what? Regular tax. So from that tax, I adjusted the entire 3 lakhs. 2 lakh 90 I still have 40. But I cannot adjust those 290 and 40 fully, because if I will adjust, what will happen? My tax liability will come below the AMT of this year. So I have to make sure that I adjust only that much AMT credit, which will not make my tax liability below AMT of this year. So how much is the AMT of this year? 1560. Adjust only 4,40,000 AMT credit so that your regular tax becomes equal to what? 15 lakh 60. So if you will adjust the entire, what will happen? Entire AMT credit, if you will adjust, your tax liability will fall below the AMT of that year, which is not allowed. You have to at least pay 15 lakh 60 for that year. Okay, no? So how much you have to actually pay? They are saying don't pay 20 lakhs. Pay how much? 15 lakh 60 for this year. Regular tax also pay 1560. Not more than 1560, but pay at least 1560, no? So from your regular tax, you will take the credit of 3 lakh, you will take the credit of 1 lakh 40, so that your regular tax becomes 15 lakh 60. Will you remember this? This is the end of AMT. But wait. Very important point I will tell you. First we will solve one other question. Then the question which we have left, on that question I will take you. But one very basic question we are supposed to solve first. Okay, no? Then that question, unit A, unit B question. Guys, this question, no? The question which we left just now, for which I was doing this discussion. Okay? On that question I am coming in some time. But before that, did you understand the entire AMT provisions? After understanding, let us take a very small basic example with numbers so that you will come to know that how to apply these provisions in the question. Then I will come to that question. Okay, no? The main question. So you must have got my AMT notes. Okay, in my AMT notes I have given all these things. See, these are the AMT notes which I have already forwarded you. Alternate minimum tax. Okay, these are the sections. And see, JC1, when are you liable? JC2, how to calculate adjusted total income. Then JC3, report from a chartered accountant. JC4, instead of 18.5%, 9% rate is there. JEE1, to whom the provisions are applicable. JEE2, when the provisions are not applicable. Even if these three deductions are claimed, the provisions of AMT will not be applicable. Okay, and here no, I will write one more thing, very important. Provisions of AMT are not made applicable to the assessees following 115 BSc. Because under 115 BSc you are not going to get these deductions also. Without taking these deductions, your total income you are going to calculate. So anyways, your total income should be higher only. Okay. And the tax rates are concessional tax rates, 115 BSc rate. Apply those 115 BSc rates. So whatever tax is there, you pay that tax only. We are not going to take a minimum tax from you. Pay only 115 BSc tax. Okay. Now see, the same thing I have done with you. This entire summary. Okay. Then right now I just explained this tax credit of AMT. How the tax credit will be formed, how it will be allowed. Okay, no, this entire provision I have explained. Now coming to this example. In this example we have to assume that the assessee is not following 115 BSc. Okay, no. So the assumption which we are supposed to take in this question, assume 115 BAC not followed. Only then you will be able to apply what? AMT provisions. Okay, no? So now this is the question. This same type of question can come in your exams. Same type of question can come in the exam. Okay. So let's do it. Mr. Ram. He is a resident, age 45 years, meaning that he is not a senior citizen. Okay. His GTI is 24 lakh 50, which includes LTCG under section 112, 1 lakh 20, and royalty income 3 lakh 50 from books of scientific nature. Meaning the royalty which he is earning is from eligible books. So he must be an author, resident individual who is an author, writing artistic, literary, scientific books. So whatever royalty he has earned and shown taxable in his GTI. So his GTI includes qualifying royalty. That royalty will qualify for deduction under 80 QQB. After taking deduction for related expenses, Up to 3 lakh it can be claimed. So this 3 lakh 50 is shown taxable, meaning that after claiming deduction only this 350 is taxable. Yes or no? This is net royalty only. Gross goes, then expenses are reduced, then net amount is shown taxable, this amount. Okay. Now pay attention, this 350 already all the deductions are taken. Now nothing is mentioned. So this is a lump sum royalty, fully qualify. All the related expenses are already reduced. So this is the net qualifying royalty. This amount of 3 lakh, whichever is lower, will be allowed under 80 QQB. Yes or no? Now, he has deposited 90,000 in PPF. So for this, he is going to get ATC deduction. And also paid medical insurance premium for self, 28,000. So meaning that for this, he is going to get 80D amounting to 25,000. Compute the amount of income tax payable. Now they are not telling you that the income tax payable will be alternate minimum tax or it will be regular tax. That you have to now ascertain, you have to identify. See, the moment you will see any of these deductions in the question, 10 AA, 35 AD, 80 IA to 80 RRB, any of these deductions you are seeing in the question. And in that same question, if they are telling you to calculate the tax liability, no, you have to be careful that in this question, you might have to determine what? AMT also. But see, in majority, in most of the cases, no, in the question, the examiner will not try to, put you in trouble like this. In majority of the questions, he will tell you only. The institute will give you only. That also check whether he is liable to pay AMT or not. Also check whether AMT provisions are applicable. If yes, then whether he is liable to pay AMT or not. This sentence will be given in the question. But what if this sentence is not given? You have to apply your mind. You have to remember, okay, that if income tax liability is given in the question, and any deduction from 10 AA, 35 AD, 80 IA to RRB, any deduction is claimed, okay, then there is a possibility that AMT provisions might get applied. Okay. So now, first of all, we'll have to calculate the total income regularly and regular tax also. We have assumed that 115 BSE is not followed, so we are going to get all these deductions. To calculate the total income, we'll take the deductions, we'll calculate the total income, and then we'll calculate the tax liability by applying normal rates. But normal rates will be applied on all the income except LTCG. On that we are supposed to apply 20%. Yes or no? Okay, now let's see. Your total income was 24,50,000. Out of that I have reduced 1,20,000 because this is long-term gain. From this you cannot take chapter 6 deduction. Chapter 6 deduction you can take from your balance GTI only. So later on we will go and add that 1,20,000, but right now 1,20,000 is eliminated. Okay. Now balance GTI is 23,30,000. From that, can you take ATC 90,000? PPF. Can you take 25,000 under ATD? 28,000 under ATD, but cannot be claimed fully. You will have to claim 25. Under section 80 QQB, royalty will be allowed, but to the extent of 3 lakhs only. That entire question same. Okay, no. Now, it is 19,50,000, 15,000. Now that long-term gain will also be included in my total income. Yes or no? Why that was excluded? Because from that long-term gain, I cannot take chapter 6 deduction. I will have to show that entire amount in the total income. So my total income will now be 20,35,000. Now tell me, are you an individual? Yes. Meaning other than company. Other than company. Have you calculated your total income? Yes. But while calculating your total income, have you taken 10 AA? No, sir. Have you taken the deduction of 35 AD? No, sir. But have you taken 80 IA to 80 RRB? Yes, you have taken 80 QQB. And even after taking these heavy deductions, your total income is more than 20 lakhs. So now the AMT provisions will also be checked. But for that AMT, now you will have to first adjust this total income. But wait, that adjustment we will do later on. First of all, this is your normal total income, regular total income. Can you apply the tax rates? And can you calculate the tax? We are supposed to do that only. We are supposed to calculate the regular total income and regular tax. Okay. So out of 20,35,000 on 1,20,000, I will apply 20%. This is my tax on long term gain. Okay. And on the balance 19,15,000, I will apply normal rates. So my tax will be 3,87,000. I'm not going to do these calculations now. You know this calculation any. Okay. Now the tax on LTCG and tax on my balance income, both the things taken together will give me 4,11,000. That is my tax on total income. This is not my regular tax payable. This is tax on total income, basic tax. Now, if this total income was less than or equal to 5 lakhs, I would have got rebate. But since it is more than 5 lakhs, I'm not going to get any rebate. Wait. Is my total income more than 50 lakhs? No. If it was more than 50 lakhs, I would have applied surcharge. But surcharge will also not be applicable. So I will apply only 4%. So my tax payable will be 427,440. Guys, this 427,440 is including cess, including surcharge, total tax. So if I am liable to pay this tax, so from my pocket this amount will go to the government. But the government is saying, sir, Mr. Ram, to you AMT provisions are also made applicable, no? Please check whether the 18.5% of your adjusted total income, meaning AMT, if it is more than your regular tax, we will ignore this total income, we will ignore this tax, and we will take AMT from you, and adjusted total income will be deemed to be your total income. Yes or no? So first I will have to calculate the adjusted total income. To calculate adjusted total income, I will have to take this total income on my calculator, and whatever 10AA deduction I have claimed, I will add. Have I claimed any 10AA? No. Have I claimed 35AD? No. Have I claimed 80 QQB? I will add that amount. 3 lakh rupees which I have claimed, I will add. So in 20,35,000, I will add 23 lakh. 3 lakh, meaning my total income will be, adjusted total income will be 23,35,000. Did you see how did I calculate? Now pay attention. This amount is nothing but 18.5% which I have calculated on adjusted total income. Now tell me, what is my alternate minimum tax? 18.5% of adjusted total income, 4,31,975. Now my first question, please be very careful. This 18.5% does not include any surcharge, does not include any cess. This is the basic rate of tax. So by applying the basic rate of tax, you have calculated the AMT. Can I say this is without any surcharge, without any cess? So if you want to compare this amount, you will always compare with the regular tax, which is without surcharge and cess. Meaning that this is basic AMT will be compared with your basic amount of tax. Yes or no? So whenever the comparison will happen, comparison between this and this will happen. Yes or no? If you by mistakenly compare with 4,27,440, your answer will be wrong. Why, sir? Because this 18.5% is without any surcharge or cess, meaning this amount is not including any surcharge or cess. So with this amount you have to compare your regular tax, which is without what? Surcharge and cess, and that is not 427,440, that is 4,11,000. Now tell me, your regular tax is 4,11,000 only, and your AMT is 4,31,000. Is your AMT more than your regular tax? Then, sir, your total income will be ignored and your regular tax will be ignored. This adjusted total income will be deemed to be your total income, and this will be your income tax liability. Now pay this tax. But wait, to pay this tax, now you will have to add surcharge if applicable. Now you will see this total income. Check. Is it more than 50 lakhs? No. So still the surcharge is not applicable. Yes or no? So 431,975 plus 4%. You are going to get 449,250. Did you get this? So you are liable to pay this much. But you will have to add 4% cess also, no? So 449,250. See, AMT got applicable and the government extracted how much money from your pocket? Government extracted this also, government extracted this also. So total extraction from your pocket was 4,49,250. Now if AMT was not applicable, how much extraction would have been done from your pocket? Only this much, no? So you were liable to pay this much. But how much you are paying? Actually 449,250. How much extra you have paid? Yes, this amount. So whenever you will calculate AMT credit, please remember AMT credit is not the difference of these two items. Yes or no? AMT credit is the difference of AMT including cess surcharge minus regular tax including cess surcharge. Getting my point, sir? Will you be able to calculate like this? If this type of question will come in the exam, it will be for minimum 10 marks. What they can do? They can change a little bit informations over here. That's it. Now, if you want to know, I can make 10 questions out of this one basic question. You just have to remember. Instead of this giving this GTI directly, what I will do? I will give you few details. On the basis of that, you calculate GTI. Now in that I will give you salary also, I will give you house property also, I will give you other sources. Or I might give you PGBP, I might give you other sources and one income salary. I might introduce the provisions of clubbing also. I might introduce the provisions of set off also. It can be any type of question now. Getting my point? But the solutions will be like this only. Will you be able to do it? So this was the only example which I have created for you all. Okay. So see this example properly. We have already solved this entire question. Now come to the question which we were solving. This question. This question only we were doing and we left the question in between and we studied the entire AMT provisions. And now we are again on this question. Okay. Now pay attention. How many businesses you are having? SEZ business and specified business. Now pay attention. For both these businesses, the profits and all the details are given in the question. Okay. Now here, if I will say that if I talk about my SEZ business and my 35 AD business, one business is manufacturing of washing machine and the second one is warehousing facility for storage of agricultural produce. Yes or no? Now the profit as given. What was the profit of my SEZ business? 40 lakhs. 40 lakhs. And what was the profit of my 35 AD business? 1 crore 5 lakhs. Now see, from both the profits now, I am supposed to take some deduction. I am going to take deduction under section 10AA from the first business. Then I cannot take it from 35 AD. I will take 35 AD deduction. Not from the first one, but from the second one. Now pay attention. Do you remember I taught you 35 AD? That time I told you if you are claiming 35 AD for a specified business, then you cannot claim 10AA for that same business. Somebody might have a doubt. Sir, you only said that 35 AD while teaching 35 AD, that if you are claiming 35 AD, you cannot claim 10 AA, you cannot claim 80 IA to RRB. Part C deductions of chapter 6A, 80 IA to 80 RRB. If you are claiming 80 IA to RRB or 10 AA, then you cannot claim 35 AD. But in this question, you are claiming both. How it is possible? Sir, same business they are talking. If for that warehousing business you are claiming 35 AD, no, so for that business you are not claiming 10 AA. Check. For this SEZ business, 10 AA you are claiming, so you are not claiming 35 AD. For that same business, you cannot claim both the benefits together. Either claim 35 AD, forget about 10 AA. Or claim 10 AA, forget about 35 AD. For the warehousing business, anyways, I was not eligible to claim 10 AA. Why? Because that warehousing business I did not start in SEZ. But what if I would have started that warehousing business in SEZ? Then I had a choice that whether from that warehousing business I can take 10 AA also or I can take 35 AD. I cannot claim both. I will have to claim only one. Okay. So from different business, different deductions are taken. Getting my point? So this is allowed. Now tell me, 10 AA deduction if you are going to calculate. Now tell me, out of the total turnover, 80 lakhs turnover is what? 80 lakhs turnover is export turnover, meaning 80% of the turnover is export. So out of this, 80% will be your export profit, no? Tell me how much 80%? 32 lakhs. Now this 32 lakh is the export profit for the current year of your SEZ business, which you commenced operations in the year 1920. Can you see? You commenced the operations in 1920. So in the year 1920, when you commenced the operation, 1920 was the first year, 2021 second year, 21-22 third year, 22-23 fourth year, 23-24 fifth year, and 24-25 is the sixth year. Can I say this is the export profit of the sixth year? Hello, this is the export profit of the sixth year. This is your EP, export profit. Out of this, only 50% will be allowed under 10 AA. That is 16 lakhs. Getting my point, sir? The balance amount will be taxable. Balance 16 will be taxable, and that 8 lakh remaining will also be taxable. Because 32 lakhs out of 40 is export profit. So 8 lakh is anyways taxable. Out of 32, only 16 is allowed as a deduction. So 16 will also be taxable. So 16 plus 8, 24 will be taxable. Hello? And 16 will be allowed as a deduction. Getting my point? So what I will be doing, I will be directly taking 10 AA deduction amounting to 16 lakhs. So therefore my eligible profit will be 24. How did this 24 come, sir? 8 lakh profit related to domestic turnover and 16 lakh export profit which I cannot claim under 10 AA, remaining 50%. So 16 lakh plus 8 lakh is nothing but 24 lakhs. Okay, sir? Now 35 AD, I started that business in this year, warehousing business in this year. The operations are commenced. So the year in which the operations are commenced, in that year, entire pre-commencement capital expenditure I can claim other than cost of land, goodwill and financial instruments. So did I have any capital expenditure incurred for this business prior to commencement of business? Yes, I incurred 75 lakhs. So that 75 lakhs entirely I could have claimed, but I will not be able to claim entire 75 because that 75 includes 10 lakh rupees of what? Cost of land. So out of this I will be able to claim only 65 lakhs and not 75 lakhs. Yes or no? So 65 lakhs I am claiming under section 35 AD. Now tell me, will you get 40 lakhs over here? Yes or no? Now can you calculate your PGBP income? This is your taxable profit from first business, taxable profit of second business. If you will add both of them together, 64 lakhs will be your total taxable profits. This is your PGBP income. Done, no? Now add income under other heads. No such income is given, sir. Other heads income was not given in the question. Okay. So my gross total income will be 64 lakhs only. Now out of this, less deductions under chapter 6A. There were no deductions also under chapter 6A. So my total income is 64 lakhs. Sometimes no, the examiner skips or the institute skips those parts which are nil. See, in the solution, if you will see, no, this entire 64 lakh your PGBP income is directly taken as total income. Why? Because there was no other heads income, there was no chapter 6A deduction. So ultimately your total income is going to be 64 lakhs only. Hello? So please don't forget the process. I am telling you again and again. Okay. Now on this total income, you will apply the normal rates only. So the tax liability will be first 2,50,000 no tax. The assessee is not a senior citizen, no? Is it given in the question that the assessee is a senior citizen? No, he is not a senior citizen. Meaning that first 2,50,000 no tax. 2,50,000 to 5 lakh, it will be 5%, 12,500. Then 5 lakh to 10 lakhs, 5 lakh rupees. On that 20% will be 1 lakh. And now the total income over and above 10 lakhs. How much is that total income? 54 lakhs. Yes or no, sir? So on 54 lakhs, you will apply 30%. That is 16,20,000. 16,20,000 plus 1,12,500. You are going to get 17,32,500. Did you all get this? Now, will you pay this much tax liability or you are going to pay surcharge also? Surcharge also. Why? Because see, your total income is more than 50 lakhs. So on this, you will have to add surcharge at the rate of 10%. 10% of 1 lakh, 17 lakh 32,500 will be 173,250. Now if you add both of them, you are going to get 19,05,750. Will you add 4% cess? This is what? Tax on total income including surcharge. Now add health and education cess at the rate of 4%. So 76,230. Add 1981,980. 1981,980. This will be your final tax payable. But tell me, are you an individual? Meaning a person other than a company? Yes, sir. Have you claimed any deductions while calculating your total income 64 lakhs? Have you claimed any deductions under 10AA, 35D, 80I or yes, you have claimed two deductions, 10AA and 35D. Oh, so after claiming those two deductions, still your total income is more than 20 lakhs, individual. Then for you, AMT provisions will be applicable. So now what you are supposed to do? Individual who is other than company claimed deductions under section 10AA and 35AD, yes or no, and after claiming this deduction total income is greater than 20 lakhs. So now the AMT provisions will become applicable. Now whether you are liable to pay AMT or not, that we are going to check now. Okay. Now when there will be obligation? When there will be obligation? Tell me. Hello sir. If the adjusted total income on that 18.5% is more as compared to this amount, guys, please remember, you have to check this amount, comparison this amount, but AMT credit, when you will calculate, you will take this amount for AMT credit. Okay, so right now for the purpose of comparison, first I will calculate adjusted total income. So to calculate adjusted total income, what I will do? Adjusted total income is nothing but my total income which I have calculated, 64 lakhs. So this 64 lakhs I have calculated by taking 10AA as well as 35AD both, no? Hello sir. So will I add both of them? Yes. So how much deduction under 10AA I have claimed? 16 lakhs. I will add back. How much deduction under 35AD I have claimed? 65 lakhs. But don't you think that on this 65 lakh rupees of building, I would have given the depreciation for the full year at full rate? Why full rate? Assuming that the building was used for a period of 180 days or more during the year. So the first year depreciation would have been at full rate. Hello sir. So 65 lakh was for building, and on that building, if I calculate 10%, so 10% of the cost 65 lakh is 6 lakh 50 depreciation. Don't forget to reduce this amount, friends. This is very, very, very important. People usually forget to, reduce this amount. So on this amount only, this is the depreciation at 10%. So now if you will calculate, you will get 64 lakhs plus 16 lakhs plus 65 lakhs minus 6 lakh 50,000. You are getting 1 crore 38 lakh 50,000. 1 crore 38 lakh 50,000 is your adjusted total income. Now calculate AMT at the rate of 18.5% of this amount into 18.5% will be 25 lakh 62,250. Now please check color, blue color, blue color. Now can I say regular tax? And this is AMT. My AMT is higher because AMT was 25 lakh 62,250 and regular tax 1732,500. Therefore, total income is equal to how much? 64 lakhs. Will now be ignored, and tax liability, which was how much? 1981,980. 1981,980. This will also be ignored. Now what will be your total income? It will be 1 crore 38 lakh 50,000. On this, what will be your tax liability? 25 lakh 62,250. But don't you think that on that you will have to pay surcharge also? Now the surcharge will be at the rate of 15%. Why sir? Total income now is 1 crore 38 lakh 50,000, which is more than 1 CR. So whenever the total income is more than 1 CR, the tax is increased by the surcharge by 10% or 15%? 15%. So 25 lakh 62 250, 25 62 250 into 15% will be 384 338. Okay, now add both of them. You are going to get 29 lakh 46,588. Now you have to add 4% cess, which will be 1,17,864. Okay, add both of them. You are going to get 30 lakh 64,452, and please round it off. 30 lakh 64,450 rounded off. Now your tax liability, total income will be this much and your tax liability will be this much. Okay, how much amount the government is extracting from your pocket? 30 64 450. 30 64 450 if AMT was applicable, yes or no? But if AMT was not applicable, how much the government would have extracted from your pocket? The government would have extracted only 19 lakh 81 980. 19 lakh 81 980. So how much extra? It is 10 lakh 82,470. This is your AMT credit. Will you be able to calculate like this? Now let's check the solution. Question number 12, no? Last question. See, first of all, what we have done, we have so far regular provisions, no? The regular provisions we have followed. Okay, so under the regular provisions, 24 lakhs and 40, 64 lakh PGBP income we got. Okay, 64 was our total income also, and we also got 19 lakh 81 980 and 17 lakh 32 500. We got these two figures. Sure, sir. Now please check, the total income was 64, tax is this much, and final tax was 1981. Now we computed the adjusted total income. Our adjusted total income was 138.50. Yes. What was the tax? 2562 250. Yes or no? So this also is matching, this is also matching. Tell me, is this amount more than this amount? Yes. So now the total income will be 1 crore 38 lakh 50, and your tax 19 lakh 81 980 will not be taken from you. How much will be taken from you? 2562 250. But on that you are supposed to pay surcharge, including surcharge this much, and the tax will be this much. Our final tax was this only, AMT. And what was the AMT credit? AMT credit 10 lakh 82 470. We also calculated 10 lakh 82 470. Everyone. Now see, this was the solution if you don't follow 115 BSc. But what if you follow 115 BSc, sir? What if you follow 115 BSc? If you follow 115 BSc, no? Simple. If 115 BAC was followed, then don't you think here the deductions which you were getting, you are not going to get anymore? So what I'll do now, I'll copy this entire part. Okay, AMT provisions will not be applicable. Done? AMT provisions will not be applicable, but I'll copy the entire part. What I will do, please check now. if I don't follow 115 BSc, no, if I follow 115 BSc, okay. Now this will remain same, this will remain same. Will I get 16 lakhs? No. Will I get 65 lakhs? No. So can I say my profit here will become 40 and profit here will become 1 crore 5 lakhs only? Yes sir. 40 and 1 crore 5 lakhs. I'm not going to get any deduction under 35D. I'm not going to get any deduction under 10AA. So my profit in that case will be 40 and 1 crore 5 lakhs. Please check. If I pay tax under default tax regime, so 40 and okay 1 crore 5, but I will get 6,50,000 depreciation. Depreciation is not denied, no? So you cannot take 35 deduction, but still you can take depreciation on that amount, normal depreciation. So normal depreciation would be 650, then this will be 98,50,000, no? 1 crore 5 lakhs minus 6,50,000, 98,50,000. Now 98,50,000 plus 40 will give you 1 crore 38,50,000 only. Sure sir? Other incomes nil. So your gross total income will be 1 crore 38,50,000, and anyways under 115 BSc you don't get any chapter 6A deductions. Yes or no? So this will become 1 crore 38,50,000. Now the tax you are supposed to calculate properly, okay, no? Tax, then surcharge also, then tax including surcharge plus cess you are supposed to do. Now pay attention. First 3 lakhs, will there be any tax? No, no tax, nil. Then 3 lakh to 7 lakh, 5%, 20,000. 7 lakh to 10 lakh, 3 lakh. On that 3 lakh, 10% will be 30,000. Then 10 lakh to 12 lakh, 2 lakh. On that 2 lakh, 15% will again be 30,000. 12 lakh to 15 lakhs, 3 lakhs. On that 3 lakh, 20%. It will be 60,000. Now how much is the total income over and above 15 lakhs? It is 1 crore 23,50,000. On that you will apply 30%. So this will be 37,05,000. Now add 37,05,000, 60,000, 30,000, again 30,000, again 20,000. You are going to get 38,45,000. Now the rate of surcharge here will not be 10%. Now the rate of surcharge will become 15%. Okay, no? So into 15% will be 5,76,750. So it will be 44,21,750, and 4% of that will be 1,76,870. 45,98,620. See, if you don't follow 115 BSc, your final tax will be this much. Please check the final amount. 45,98,620. 45,98,620. Now, if you follow 115 BSc, then they are going to take how much from you? 30,64,450. It is still lower than 45 lakhs, no? Hello? So if you don't follow 115 BSc, the government is going to take AMT from you. The government is not going to take 19,81,980. The government is going to take 30,64,450 from you. Yes or no? But that is still lower than 45 lakhs. And guys, one more thing. Even if the government is taking a higher amount, don't you think that whatever amount extra the government is taking over and above 19,81,980, that amount they are allowing you in the form of AMT credit also. So it is always advisable in such case to tell your assessee, tell your client that, sir, don't go for 115 BSc. Yes, shift out. Because if you will shift out, no, AMT provisions will be applicable on you. And as a result of that, you are not going to pay the normal tax. You are going to pay how much tax? You are going to pay AMT only, but that is still lower than 115 BSE. And the extra amount which you are going to pay in the form of AMT, that will be given to you as AMT credit, which you can set off any time after 15, within the span of next 15 years from your regular tax liability. Getting, sir? Done, sir? This is the end of that question. How was this question? Good, no? This question is there in the ICAI study mat since last 4 years, minimum 4 years, and has not been asked in the exams. So God knows you are the lucky person getting this same question in the exam. Not even same, in terms of amount they will do some changes, but if that similar type of question will come in the exam, no, this will be for minimum 10 marks. Minimum 10 marks. Mark this question important. This is the only question having AMT provisions in your ICAI study mat. Getting my point, sir? Done, sir? Perfect. Okay. So let's look at section 115 BSE. Default tax regime 115 BSE. Please. To whom this provision applies? This provision is applicable to individual HUF, AOP, BOI and AJP. Okay? And AJPs must be other than cooperative societies, because for cooperative societies there is a different scheme which is prescribed. Okay, no? So if for cooperative, the AOPs which are cooperative societies, for them if different scheme is prescribed, so the cooperative societies are not covered by 115 BSE provisions. Okay? Now, what you are supposed to do? See, whenever you compute your total income, compute your total income, compute your total income without taking certain specified deductions and exemptions. So, under section 115 BSE, they are telling you to compute what? The total income without taking certain specified deductions and exemptions. Which are those deductions? Which are those exemptions? The list is given. We'll see that list. Okay. Now, once you calculate your total income like this, now from your total income, whatever special income is there, so special incomes means which incomes? STCG 111A, LTCG 112, LTCG 112A, winnings income is there. Okay, all those special incomes which are there, apply special tax rates which are applicable on those incomes, yes or no, and calculate the tax. But On the balance part of your total income, you are going to apply concessional tax rates which are given under section 115 BSE only, and calculate the tax. Now add both of these taxes, you will get tax on total income, then surcharge, rebate, 4% cess, gross tax liability, TDS, TCS, advance tax you reduce. Then you can reduce what? Your relief under section 89. All those things are same. But your tax liability, basic tax liability calculation will happen like this. But these rates will be allowed only if you don't take certain deductions and exemptions. And now this is your default scheme. This is your default. If you don't want to follow, you want to claim all the applicable deductions and exemptions, then you'll have to shift out. So from 115 BSE, you shift out. So you go to optional tax regime. This is when you don't follow 115 BSE. Okay, now you shift out, meaning you are not following. Shift out means you are not following 115 BSE. Okay, so you are going in the optional tax regime. Now in the optional tax regime, take all the applicable deductions and exemptions. And you will get your total income. Okay, now in that total income, what you are supposed to do? You are supposed to do the same thing. On the special incomes, you will apply special rates, you will get a tax amount. And on the balanced total income, now you are going to apply normal tax rates which are given in Annual Finance Act. Then you calculate a tax amount. This plus this plus this is tax on total income. We have been doing like this only now so far. Okay, so tell me, without taking specified deductions and exemptions, the total income will come. On that total income, you apply tax rates under section 115 BSE. But if you are taking deductions and exemptions, then on your total income, you are supposed to apply what rates? Normal tax rates. Then you calculate this tax. Both the taxes will be different. Now what are the normal tax rates? Did I tell you? Have I explained you what are the normal tax rates? In the very first chapter only we have studied the normal tax rates. What are the special tax rates? We all know. LTCG how much tax rate, STCG how much tax rates, okay, and winnings income how much tax rates. We all know that also. Do you know 115 BSE rates? Yes, we have been doing that only. So what are the 115 BSE rates? Come on, the tax rates which are going to apply here these tax rates. On this balance total income, whatever tax rates you are going to apply. What are these tax rates? Concessional tax rates. First 3 lakhs, no tax. 3 to 7, 5%. 7 to 10, 10%. Then 10 to 12, 15%. And then 12 to 15, it is 20%. Then above 15 when you will go, now see, from 20 directly jump to 30. Don't make it 25. Above 15, it is always 30. Okay. Now, this is the basic exemption limit which you are going to get if you follow 115 BSc. And this is the same. Even if you are a senior citizen or a super senior citizen, it will not change. So any individual, HUF, AOP, BY, AJP, AOP other than cooperative societies are supposed to apply these tax rates on the balanced total income, which is calculated without taking certain deductions and exemptions. Yes or no? Apply these rates. But these rates are applicable for all types of assessees. Individual, HUF, AOP, BY, AJP. Whether the individual is senior citizen, then also this will be applicable. Whether that individual is a super senior citizen, then also it will be applicable. But in the normal tax scheme, optional tax scheme, this is 3 lakh rupees basic exemption limit. First 2 lakh 50 basic exemption limit for all. But if it is a senior citizen, then it is 3 lakhs. Super senior citizen, then it is 5 lakhs, which is not applicable here. Okay. This is one important thing which you are supposed to remember. Now second thing, once you calculate this tax, okay, no, this will be a tax on total income. And here also you are going to get tax on total income. Okay. Now on this tax on total income, are you going to apply surcharge? Surcharge at what rate? See, we usually apply surcharge at the rate of 10% or 15% or 25% or 37%, depending on the fact that how much is the total income. Yes or no? See, right now what I am doing now, I am doing a comparison between normal and 115 BSc. Okay, so you will come to know where you are supposed to do what. Done. So surcharge will be 10%, 15%, 25% or 37%. And do you know that this 25% and 37%, this is a higher rate of surcharge? Which I told you that time also, that this higher rate of surcharge not applicable on tax which you have calculated on STCG 111A, on LTCG 112A, and on LTCG 112, and also one tax on dividend incomes. Yes or no? Did I tell you this? Yes, we all know that the higher rate of surcharge 25%, 37% not applicable on these 4 taxes. Now pay attention. Copy and paste. Same thing. Can you see? Same thing. There is no change. But the only change is this 37% is not applicable. So if your total income is more than 5 crores, the rate of surcharge used to be 37%, no? Here it will remain 25% only. 37% is not applicable. See, they are attracting you. Don't shift out. Don't shift out. Stay here. That's why they are giving you what? Concessional tax rates, which you just saw. Okay. Still you are planning to shift out. then they are telling you, see, if your total income will be more than 5 crores, no, still we will not charge 37%, we'll charge only 25%. So don't shift out. Another benefit. So one benefit, there is a benefit in the tax rate. Second benefit, there is a benefit in the rate of surcharge. If your total income goes beyond 5 crores, then the rate of surcharge will be 25% only. It will not become 37%. Yes or no? Now, one more thing. Rebate was applicable. Do you remember rebate? Under section 87A. What was the rebate? Tell me. Tax on total income excluding tax on LTCG under section 112A. Because this tax cannot be taken as rebate. I have already told you. Other than this, whatever tax on your total income is there, you can claim as rebate or 12,500, whichever is lower. This used to be our rebate, but the rebate was available only if you are a resident individual having a total income less than equal to 5 lakh. This was the condition to claim the rebate. And if the rebate was available, it was available how much? Maximum 12,500. If you will shift out, this will be your rebate. If you will not shift out, no, come here. Same. Copy, paste. You are going to get rebate here also. But now the amount of rebate, instead of 12,500, it will be 25,000. Everything remaining same. LTCG 112A tax cannot be claimed as rebate here also. But the amount of rebate will be 25,000. Maximum rebate under 115 BSE. Okay, no? Hello, sir. Understanding, Krishna? Now pay attention. Your total income, even if it is more than 5 lakhs, still you are going to get rebate. But it should be less than equal to 7 lakhs. Are you seeing the difference? Now pay attention. Here no rebate. If total income is more than 5 lakhs. The moment your total income becomes more than 5 lakhs, meaning 5 lakh 1,000 also, then also you are not going to get any rebate. If you will shift out, first the total income limit will be less, amount of rebate will also be less, and the moment your total income will be more than 5 lakhs, we are not going to give you any rebate. Okay? Copy paste. What is the limit over here? 7 lakh limit is there, no? So what if your amount is, total income amount is greater than 7 lakhs? Okay. You will still get rebate. You will still get rebate. But the total income exceeding 7 lakhs, no, there has to be a marginal increase only. Marginal increase. That does not mean that we will take away your rebate. Still you are going to get the rebate. Now in this case, how the rebate will be calculated? Simple, 3 steps. Step number 1, A. Calculate your total income minus 7 lakh rupees. Because see, till 7 lakh you were getting rebate, no? So now we will see how much total income is more than 7 lakhs. Okay. For example, total income is 7 lakh 5,000. Everyone, total income is 7 lakh 5,000. So 7 lakh 5,000 minus 7 lakh. How much total income is more than 7 lakh? Only 5,000. So your total income increased by only 5,000. And you are not going to get rebate. No, 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 no. We are still going to give you rebate. Do one thing. Tell us what is the tax liability. What is the tax liability on your total income? So first you will have to calculate the tax liability on your total income. Can you calculate the tax liability on your total income 7 lakh 5,000? Yes, very easy. First 3 lakhs no tax. 3 lakhs to 7 lakhs. That is 4 lakh. On that you will apply 5%. It will be 20,000. And above 7 lakhs it is 5,000 only. On that 5,000 you will apply 10%. It will be 500 only. So your tax here will be 20,500. Now you will have to check. If the tax amount on your total income, which is B, if that is higher than increase in your total income over and above 7 lakhs. How much was the increase? Tax is 20,500, but your total income is only increasing by 5,000. Just imagine, till 7 lakh you were getting rebate, no? 25,000. And the moment your total income became what? Total income became 7 lakh 5,000. Entire 25,000 benefit washed out. And you are supposed to pay 20,500. Is it good? No, na? So if that tax which you are calculating is more than the increase in your total income. So increase in total income was 5,000 only, no? The tax is 20,500. Is this 20,500 more than 5,000? Yes. If this equation is fulfilled. What did I say? If this equation is fulfilled, then you are going to get rebate. Then also you are going to get rebate. And how much will be the amount of rebate, you know? Amount of rebate in this case will be B minus A. What was your B? 20,500. What was your A? 5,000. B minus A, 5,000. Reduce 5,000 from 20,500. You will get 16,500. Now we are not going to give you entire 25,000 rebate, but still you are eligible to get 16,500 rebate. So how much? 20,500 minus, sorry, 15,500. Not 16,500, 15,500. 20,500 minus 5,000. It will be 15,500. So we are not going to take away the entire 25,000 from you. Some portion of your rebate will go away, but still you are eligible to get 15,500 as rebate. So how much was your tax? 20,500, no? Don't pay 20,500. Take 15,500 as rebate. So final tax will be 5,000. Your tax will also be 5,000 if your increase is 5,000. Got it, sir? Let us take one more example. 7,20,000. Your total income became 7,20,000. Apply this. Don't do anything. Is your total income more than 7 lakh? Yes. How much? 20,000. So A will be 20,000. Now B, calculate the tax on 7,20,000. 7,20,000. Yes or no? So first 3 lakh no tax. Then 3 lakh to 7 lakh. It is 20,000. On 4 lakh 5%. And on 20,000 which is over and above 7 lakh, on that 20,000 you are supposed to pay how much? 10%, 2,000 rupees. So what is your total tax? 22,000. Is it more than 20,000? tax is 22 and increase in total income is 20,000. Hello? So is it still tax is more than 20,000? No, 22,000 is more than 20,000. You are going to get rebate. How much? 2,000. So how much tax you are supposed to pay? 22 minus 2,000 rebate. You pay only 20,000 tax. Getting my point? And add 4% cess and all, which you are supposed to do every time. Yes or no? What if your total income was 7,50,000? So A will be 50,000. B will be how much? B will be how much? Come on, calculate. What will be the tax on 7,50,000? 25,000 only. Done now? First 3 lakh no tax, then 3 to 7 20,000, and then 7 lakh to 7 lakh 50 on 50,000 you are supposed to calculate 10%, 5,000 plus 20,000 25,000. Now tell me, is 25,000 more than 50,000? 25,000 tax is more than increase in total income 50,000? No, you are not going to get any rebate. Pay entire 25,000 tax plus 4% surcharge. Getting my point, everyone? Will you be able to do it? Will you be able to do it? Tell me yes or no. Sure? Okay. So this was your rebate. Now please pay attention. See, I have explained this part. I have explained this part also. Okay. And I have just now explained this part also. Please read this. Same calculations we have done, no? Now pay attention. Can I say tax including surcharge? Tax including surcharge will come on that 4%, 4%. Or tax after rebate can also come on that also 4%, 4%. So 4% cess was applicable here. Health and education cess is applied on tax on total income including surcharge or after rebate. That you are going to apply here also. Okay, sir, that 4% is supposed to be paid both the times. Don't forget to apply this 4%. Okay. Now you are going to get gross tax liability. Out of that gross tax liability, reduce TDS here also, TDS here also, TCS here also, advance tax, relief, everything is same. Then finally the net tax liability will come or refund will come. Yes, sir. Now, did you understand the comparison? Okay, don't commit mistakes. Now pay attention, which are the deductions and exemptions? Which are the deductions and exemptions which are specified that you cannot take these deductions or exemptions if you are following 115 BSc. Okay, so please pay attention. This is given in important notes. Note number 1. Can you see? Can you see? But wait, before that, no, I would like to tell you this. This health and education says I have told. Next, marginal relief concept we did. Do you remember? Yesterday, in one question also we did marginal relief. There, 115 BSc tax rates were applicable. So, the marginal relief concept remains same. Whenever your total income goes above 50 lakhs or 1 crore or 2 crores or 5 crores, so you are liable to pay surcharge or you are liable to pay a surcharge at higher rate. Yes or no? So because of that surcharge or because of a higher rate of surcharge, if the increase in tax is more than increase in total income, then you get the marginal relief. The concept which you used to apply there will be applicable here also. There is no change. But the only change is apply normal tax rates and calculate tax. Apply 115 BSE rates and calculate tax. Everything is going to be same. Got it, sir? Now, please read this part. You don't know this, or you know? This is something which I wrote here. Shift out. Now this is default. So if you don't want to follow, you want to apply the normal rates, shift out, because this is default. Got it, sir? So this thing also I have explained. Okay. Now, don't you know this? Just now, some time back, we have done one question. Mr. X having two types of business. What if 115 BSE followed? What if 115 BSE not followed? AMT applicable, not applicable. Whenever 115 BSE is applicable, remember, those heavy deductions are not allowed. 10 AA, 35 AD, 80 IA to RRB, yes or no? So if we are not allowing those deductions only, so your total income is not going to come less. Understanding? Your tax liability will not be less. You are going to pay more tax only because your total income will be more. And putting you in the trouble of AMT also again will not be good. See, another effort to keep you in 115 BSE. That if you will shift out, remember, if you will shift out, AMT provisions will be applicable, will charge more tax. If the tax is less, will not charge less tax, will charge more. So you will say, charge, no problem. Even if higher tax is charged in the form of AMT, that we are going to get a credit, no? But what if higher tax is charged here? We are not going to get any credit also for that tax. Yes or no? So they are trying to convince you, stay here, we will not apply AMT provisions. Getting my point? Now tell me, which all deductions are not allowed? Think from salary head. Do you remember salary head? We did one LTA, 10.5 exemption, 10.5 LTA for a journey performed in India, exempt journey performed by air, journey not performed by air, then places are connected by rail. That exemption we did. That exemption will be applicable if you shift out. But if you stay in default tax regime, LTA exemption will not be applicable. Full LTA will be taxable. 10.5 will not be available. Then do you remember HRA exemption you used to get? That entire HRA exemption you are not going to get. Full HRA will be taxable. Do you remember those special allowances, traveling daily in a conveyance with academic or research helper in uniform? Children, two children, running and commuting, where? Underground in tribal area. So those exemptions were available for these allowances under section 1014. Now whenever you shift out, you get the exemption for these allowances based on amount spent or based on the limits prescribed in IT rules. Okay, now? But if you don't shift out, if you remain in 115 BSE, the exemption available for these special allowances will not be given except for these allowances. For these allowances, even if you follow 115 BSE, exemption will still be available. Traveling allowance, daily allowance and conveyance allowance. Amount spent, to that extent it is exempt, yes or no? It is exempt under the normal provisions also, it is exempt under the 115 BSE also. Please don't forget this, This is very important. And one exemption was available, transport allowance to the handicap employees up to 3,200 per month. Yes or no? That is exempt even if you follow 115 BSE. So these four allowances are exempt under 115 BSE also. But other than these four, children education allowance fully taxable here. Children hostel expenditure allowance, fully taxable here. Then do you remember that running or outstation allowance, fully taxable here. Tribal area allowance, underground area allowance, fully taxable here. Uniform allowance, fully taxable here. These 4 allowances were exempt when you shift out. Then also this is exempt. Others are also exempt. These are exempt. And other than this, others are also exempt. But when you follow 115 BSE, others are not exempt, but you can take the exemption for these allowances. Okay. Now do you remember in IFOS I had told you MP, MLA, MLC, they are getting what? Constituency allowance, daily allowance. So their constituency or daily allowance will be exempt under section 1070. Their salary will be taxable as IFOS, but their daily or constituency allowance will be exempt under 1070. But if you follow 115 BSE, that allowance will not be exempt, that will be now taxable. Yes or no? Do you remember for clubbing, minor child's income used to get clubbed? 1500 rupees per annum per minor child you used to get the exemption. Will not be given if you follow 115 BSE. 10 AA just now we did some time back. 15 years tax holiday. First 5 years 100% export profits, then 50%, then 50%. If you follow 115 BSE, forget about 10 AA. Just tell me which SEZ assessee will leave 10 AA. Bloody forgetting that 10 AA only we have gone there and we are following 115 BSE. Are we mad or what? We are not going to follow 115 BSE. Getting my point? Then do you remember that entertainment allowance which we used to get? Then professional tax deduction which we used to get under the head salary, that will also not be allowed. But remember, standard deduction you are going to get. There you are going to get 50,000. Here you are going to get 75,000. Okay. Another effort to keep you in default tax regime. There you are going to get only 50. Come here. We are going to allow 75. Stay here. Don't shift out. Okay. Then do you remember SOP interest we used to claim up to 30 or sometimes up to 2 lakhs also? That SOP interest will not be allowed. If you follow 115 BSE, only SOP interest will not be allowed. Meaning LOP, DLOP interest was allowed fully. Then also, and under 115 BSE also, LOP, DLOP interest will be fully allowed. Will you remember? Hello? And now, PGBP head. In PGBP head, you used to claim additional depreciation. That additional depreciation will not be allowed. These all things I have told you at correct places. We are just, looking at these things right now. We are consolidating. That these things were scattered everywhere. We are consolidating at one place. So now you will see here and then you will start solving the questions. You will come to know, okay, 115 BSE followed. This I am supposed to take. This I am not supposed to take. Yes or no? Then do you remember that donation for scientific research, etc., which was available under section 35? That you are not going. See, additional depreciation you are not going to get, but normal depreciation you are going to get. Under section 35, donations you are not going to get, but the expenditure for scientific research, revenue or capital expenditure, that you are still going to get. Hello, sir. So, expenditure incurred will still be available, but the donations made for scientific research, etc., will not be available as a deduction. Then 35D, specified business, capital expenditure you used to claim. The cost of entire cost of asset, you used to claim as a deduction, other than land, goodwill and financial instruments. Yes or no? That is not going to be available under 115 BSE. Just imagine any specified business, any assessee doing specified business would have started doing that business because of that deduction only, no? Will he forget that deduction and come under 115 BSE? Nobody is going to come here. And see, family pension which you used to get, IFOS, 1/3 of family pension or 15,000, whichever is lower, you used to get a standard deduction to the extent of maximum 15,000. They are telling you, go, take 25,000 standard deduction. But stay here. And remember, no deductions under chapter 6A will be available except these three deductions. ATCCD2, employer's contribution to NPS, first taxable, claim under ATCCD2 up to maximum 14%. You are following 115 BSc. But if you don't follow 115 BSc, up to 10% only. Yes or no? Of your salary. Then ATCCH2, employer's contribution, government's contribution to Agniveer Corpus Fund. Fully allowed. First taxable as your salary, then fully allowed under ATCCH2. Allowed here also. Then ATJJAA, additional employee cost, 30% of that for 3 consecutive years. Allowed there also, allowed here also. Other than these 3 deductions, you cannot claim any other chapter 6 deduction. All the chapter 6 deductions are gone. Okay. Now, you have to remember each and every deductions and exemption which is given in this list. If you forget any of these, you are going to commit mistake. And these are very easy to remember, no? Because we have solved questions also. In the questions also, we are able to identify this. Okay, no? Sure? Now, see what they are saying. When you claim interest on SOP, will it be allowed or it will not be allowed? Not allowed. Interest on LOP, DLOP will be allowed. And don't you think because of this interest deduction under LOP or DLOP, there will be a loss? Now what if that loss is not getting set off within the head? Now what you will do? There will be a house property loss, and now house property loss will not be because of SOP, because SOP interest is not allowed only. Now the house property loss will be because of full amount of interest is allowed for LOP and DLOP, yes or no? And because of this full amount of interest deduction for LOP, DLOP, there will be a loss of house property head, which could not be set off within the same head. So now up to 2 lakh, it can be set off against other heads, yes or no? But if you are following 115 BSc, the loss of house property head cannot be set off up to 2 lakhs from any other head, which was allowed under normal tax regime, yes or no? And we have done this thing in set off and carry forward. Now see, because of any of these deductions which you might have claimed in the earlier year. In the earlier year, when you were following normal scheme, that time you would have claimed these deductions and exemptions, no? And because of these deductions and exemptions, in any earlier year, there was a loss. And that loss you have carried forward in this year. And in this year, now you are following 115 BSc. Bloody, you are following 115 BSc. These deductions for this year we are not allowing. So the loss because of these deductions happened earlier, which you have brought forward in this year, they will also not be allowed as a set off. Just imagine additional depreciation you had claimed earlier and that remained unabsorbed. Now you are bringing that additional unabsorbed depreciation here. You will not be allowed to set off that unabsorbed depreciation because it is because of additional depreciation. Yes or no? Additional depreciation for this year we are not allowing. Earlier year's additional depreciation resulted into unabsorbed depreciation which you are bringing in this year. So what do you think? We are going to allow you that set off? No. Forget about that. Lapse. Understood? So this is given here. Okay. Brought forward losses or depreciation from any earlier years shall not be allowed to be set off if such loss or depreciation is attributable to any deductions or referred to in point number 1 above. So this loss is because of any of these deductions in earlier years. Okay. And that loss is brought forward in this year. In this year, this loss will not be allowed as a set off now. Got it? Now, within how much time you are supposed to shift out? See, default is there. Now, if you don't shift out, default will be applicable. Yes or no? So, you have the option to shift out, no? So, within how much time you have to shift out and how many times you can shift out? Every year, this option will come prior to filing your return. So, whenever you are going to file your return every year, you have this option. Check whether you want to stay in 115 BSc or you want to shift out. On or before the due date of filing return, in your return only you are supposed to tell the government that you are shifting out. Okay. every year. So every year you will have to make that comparison, which is more beneficial, which is more beneficial. We have done that in few questions also. We have solved as per 115 BSc also, we have solved as per normal scheme also, and which is more beneficial, we have given that advice also. If 115 BSc is not better, we follow normal tax regime, meaning we shift out because the total income is less and the tax liability is also less. Yes or no? So this you can do every year. Every year you can do. Every year you can shift out. Now for example, this year you followed 115 BSc. So next year if you want to shift out, you can shift out. Or for example, this year you have shifted out. So that does not mean that next year you are not going to get this option. Next year again 115 BSc will become default. And next year if you want to shift out, next year again you can shift out. Or next year if you want to stay in 115 BSc, you can stay in 115 BSc also. Getting my point? But there is a very big drawback. This option to shift out and remain in 115 BSc every year is available only if you are not having PGBP income. But if you are having PGBP option, PGBP income, then you have to every year shift out. If you don't want to fall in 115 BSc trap, you have to every year shift out. The year in which you don't shift out, you are earning PGBP income. And the year in which you don't shift out, from that year 115 BSc will stick to you every year. Now later on you are not going to get this option to shift out. Now forget about 115 BSc, in a single year you are gone. Forget about shifting out, you are gone. 115 BSc will stick to you forever till the time you don't stop earning PGBP income. Now 115 BSc will be applicable. So option to shift out you have to take every year if you are earning PGBP income. If you don't take that option to shift out every year, that means you are following 115 BSc. And the year in which you have followed 115 BSc, from that year onwards, you stop getting this option. Okay? This is 115 BSc if you follow, if you are earning PGBP income. But if you are not earning PGBP income, see, this year you followed 115 BSc now. Next year also followed. After 2 years, you want to shift out? Go shift out, no problem. 115 BSc will not stick to you. Getting my point? See, Madam Nirmala Sitharaman, you are not following this, no? Optional, no? See, now we have made it default also. And once you forget to shift out and you are earning PGBP income, this will stick to you forever. Now, if you want to shift out, you will have to stop earning PGBP income. This is made from 2020, last year only, because since last year only this scheme has been made default, no? Okay. Earlier, this option was available every time. Okay. In every case. But last year onwards, this is compulsory now. Got it? So, this was your 115 BAC, my dear friends. Okay.